Everyone talking about the housing crisis in Canada.
Is there?
There's 25,000 houses sitting in the market.
We don't have a housing crisis at all. We have an affordability issue.
Live behind decisions I chose. Peaks feel good and the valleys get low. Chains for the tires in the rain, hail, snows. Like this everywhere that I go, everywhere that I go.
Hey everybody, it's Hussein Kabani, your favorite broker, and we are with the one and only Varan. And guess what? Varan knows mortgages, and that's why he's here.
Thank you. Thanks for having me again.
Welcome back, man. All right, so let's get into it. We have been talking and have been bashed about saying that the interest rates are going to come down, and guess what happened?
It did.
Yeah.
Finally.
But what else happened?
Inventory went up.
Yeah, inventory went up. Sales went down.
Sales went down, yeah.
So really nothing happened from the interest rate.
Inventory actually went up significantly.
Yeah, so right now we are at 24,000 listings available for sale, which has been the highest position ever. Like I've been trading real estate for 13 years, never seen it at this level. Talked to some other people, try to find stats. Never had 24,000 listings available for sale.
In the last 13 years you've seen, eh?
Yeah, so the last time I believe was May 2013, and that was like 22,400-ish if I remember correctly. Now we're at 24,000. Yeah, now we're at 24,000 listings available for sale.
What's the reason?
I think that a lot of people are, I think a bunch of the people on the market probably can't afford where they are at right now. Probably, and you're probably experiencing a similar thing. People that got these mortgages at low rates, they're probably coming up with their renewals and they probably can't afford it. And I think it's probably also short-term, short-thinking property investors that didn't do their calculation correctly, and they are now facing higher interest rate, higher payments, negative cash flow, and just can't afford it.
Can't afford it.
Yeah.
Yeah. I'm seeing that too. I even had a client yesterday. I was sharing with you earlier. He has a first mortgage and a second mortgage. His mortgage payment is actually $2,000 higher than his net income.
Mortgage payment is higher than $2,000 of his net income.
Yeah.
Yeah. I mean, I think we're seeing this happen more and more and more. And we've said it before, which is basically if you are going to be renewing your mortgage, if you have bought a property as an investment and you already have a mortgage on it and that's going to come up for renewal, you have to be looking at your numbers in advance and coming up with a strategic plan to figure out how you're going to cash flow these things, right?
Correct. I had a client who had a $2.5 million mortgage at 3.04%.
Okay.
Went up to 6.94.
So what was the payment differences?
I think the final payment was $17,000. It's a significant
$17,000 a month.
It's a significant bump. I'm glad actually I advised a client to take 3 years instead of 1 year. So at least he was able to carry for almost 3 years since he bought the property.
Wow.
But it's a significant cash flow problem.
Yeah, that's a huge problem right now. And I mean, like, we've actually run into that with our own clients at this point right now too. Like, and I'll tell people, like, we basically had a client that bought his first property pre-construction, and then he bought another property pre-construction as well. And that property was coming up for closing. And he hired me to sell that property. But at the same time, whenever I start working with somebody, I ask them if they're dealing with a mortgage person or whatnot. He said he's working with somebody, he's happy with them. I said, that's awesome, man, good for you. And then so I continued on with the sale, but the sale turned out to being tougher because the market, the inventory got a lot higher. There's a lot of competition out there. And just the people that were buying out there just dropped off. So we were coming up to a point of basically saying that, hey, we're not sure if we can actually sell the property before this happens. And you might need to try to figure out a way to close on this other property before this one actually sells.
Yep.
So he was working with his mortgage guy and they wanted to do something. He mentioned to me something that just didn't sound right to me at all. And that was the time where I encouraged him to talk to you of basically saying, hey, how is this all going to work out? Well, we basically figured out that it wasn't going to work. It wasn't going to be a good thing for him to get involved with this thing, right?
Yep, absolutely.
And ultimately what ended up happening is that we did end up selling his property and he didn't get into an A lender like he thought he was going to, right? You had to put him into a B.
But at least we closed the house, we saved his deposit.
Yeah.
And he got what he had to get in and we can revisit it after a year.
Exactly. And I think the way that you set it up was very strategic. So he can come back after a year and he can, hopefully, if he keeps to the plan that you kept for him, he can basically qualify at a lender, at an A lender.
With a little bit low interest.
Yeah, a little bit. I think his interest rate wasn't that much higher. It was like a point or something like that.
It wasn't significant at all.
Yeah, yeah. So we've had this. And here's a client that actually listened to what we had to say. I had another client, I'll just mention this to you guys. sold his house at the end of last year. I knew that he had a townhouse closing, and he already committed himself to a pre-construction property that was quite expensive as well. And when you work with somebody, you kind of get their financial position. And I kind of had a feeling that, hey, this guy's probably not in a good financial position. He's probably over-leveraged, committed it too much. And so I got concerned. So after we sold his property, we were talking to him about his townhouse, trying to figure out like how this was going to work. Because even when he sold his property and was going to close on the townhouse, I referred him to you because he was having mortgage issues at the same time. Yeah, you sat down with him too, and we're just like, dude, this doesn't seem like a really good way that you're going to be able to do this. Like, we can close you on the townhouse, but you got to strongly consider selling this townhouse in order to close your other property, because you don't make enough money. Even when we factor in the rent, you don't make enough money to float both of these properties with the rent that you're estimated to get anyway. So it doesn't make sense. But I followed up with him for 2-3 months. He never got back to me. And then I kind of checked it out. He never said anything to us, but that property that he bought pre-construction is closed, and he has his house up for rent right now. So he owns these 2 properties, and we know that he doesn't qualify for it. I'll let you guys speculate about how that happened.
And we see what's going to happen in maybe in a year or so.
We don't know. But see, I guess the thing is that I think people are already in trouble. And I think it's time for people to start making the right decision. I don't think that you could be blinded by the market and say that because things appreciated so fast in the past, it's going to somehow change again. You even mentioned
trend is gone.
Yeah, like even I've heard report of basically saying like in 2026 it's going to be the highest price that we've ever seen, beating 2022 out of the water. Fine.
Hope it happens.
I really hope it happens because we're invested in the market, okay?
Yeah.
And when it does, I'm selling everything. But I don't understand how, especially right now, highest inventory position ever. Our sales from May 1st to May 12th compared to June 1st to June 12th are already lower. And even when I look at last year June versus this June until the 12th day, we're already lower in that.
Compared to 2023.
Yeah, and our inventory just keeps climbing. So so what's going to happen over here?
Is it because of the condo is one of the main reasons?
I don't know if it's the main reason, because even if you look at areas like Durham isn't that heavily concentrated in condos.
The condo market, yeah.
I guess in Toronto, you can split it down and say, maybe the condo market has something to do with it, because the condo market in the 416 is holding like around 90% more inventory than we did last year.
Okay.
So our inventory position is really high on it. But like across the board, if we look at every region, you're roughly at between 70 and 85% more inventory across the board.
Okay.
So the inventory is high everywhere in all segments. And this interest rate obviously is not helping, and no one has an appetite to do anything. It's almost like we're at a standstill.
And also I'm seeing the same trend with the mortgages coming up for renewals as well. Everyone wants to go back to a 30 amortization. They want to kind of redo the mortgage to have a cash flow.
Yeah.
Because the payments has gone up. So those 2019, 2020 mortgages at 2 to 3%, they're coming up, and now the rates are 5-6%. So they need a cash flow.
Yeah.
So they want to go back to 30 years to keep the payments stagnant.
And are they able to do that?
So it's become a refinance, right?
Okay.
It's become a refinance. Some of them qualify and some of them don't qualify. We even spoke about some of the clients I had done the mortgage 5 years back. I can get you a better rate somewhere else, but they don't have an option because they cannot technically qualify to go to the different lender.
Yeah, because I guess the thing is that if you have an existing mortgage right now with, say, like TD Bank, and you might get a better rate at RBC, but the thing is you don't actually qualify for that anymore.
It was much easier to qualify back then than right now.
So you don't qualify with the RBC, even though you're getting a lower rate because your income and your ratios don't make sense. But TD is willing to just renew the mortgage for you, right?
So you end up, you're better off renewing it.
Yeah, and you're stuck. And they might give you a higher rate, but you have nowhere else to go.
So we are seeing more and more. And also that's also cash flow as well, right? So if you go to a different lender, you can have a smaller payment, but you had to re-qualify again.
And you're seeing that people are, for the most part, are not even
to qualify. It's like a initial conversation. I'm like, you're not better off renewing with the existing lender.
What are you seeing in terms of like people that may be coming to you for help? Like, are these investors? Are they like people that got stuck being first-time home buyers? Are they people that just paid too much for the property? They over-leverage themselves? Like, what are you seeing as like?
It's a combination of everything. But at the end of the day, the biggest challenge is the cash flow.
Yeah.
It doesn't matter. You could be an investor, you could be a first-time buyer, or you could be a move-up buyer, like you just regular home. Everyone's stuck with the cash flow.
Right. So and the other thing I guess is important to highlight too is that the interest rate is one thing on a mortgage, but the other thing is that people do carry debt. right? People
Cash.
do carry debt and their line of credits, they carry debt on credit cards and stuff like that. Now to be able to service that debt at the same time, and also like the cost of living has gone up quite a bit too, right?
Gas
Our fuel
prices,
costs,
groceries.
groceries, everything
Car
has gone
payments.
up. Yeah, car payments, everything has gone up. So it's not just the housing that's affecting you. You're getting hit in every single category of your basic needs almost.
I even run into some of the clients, they're using the line of credit and credit cards to keep up the mortgage payment.
Yeah.
I'm like, that's a sign for you to seriously think about doing something different.
Yeah. So I guess like we can continue to talk because we have a lot of stories about doom and gloom that's happening with clients right now. Like, what can we say to people that are like thinking about entering the market? Because I believe that there's still two markets or two segments that this market is still good for. And both, I would say both segments have to believe that Canadian real estate overall in the long term is still going to do well.
Yeah.
If you have that fundamental belief, then I would say first-time home buyer.
And the holding power.
Yes. I would say first-time home buyer has an opportunity over here.
Even the mover buyers.
Yeah. So those are the two. First-time home buyers and move-up buyers. I think as long as you're comfortable with your employment, you're going to...
Payments.
You're comfortable with your debt service ratio, you're comfortable with the area that you're going to choose to live in. I used to say 5 years, 7 years. I'm saying 10 years. Like if you're comfortable with that position, then I think that you have this thing. What do you think they should look out for though?
I think the main thing is can you really afford it? I think that's what it comes down to. You don't want to just do it of sake of buying a property or being a homeowner. Like it's just something you can keep it for the long term, like a 5-10 years. Can you able to keep up the payment? I'm seeing people unfolding in few years, which is pretty scary.
Yeah. So it's basically, if I summarize it, what you're trying to say is that don't make an emotional decision.
Emotional decision, exactly.
And don't make it out of what is somebody else doing
don't
or
be
fear
peer
of
pressure.
missing out.
Don't have a FOMO.
Yeah, exactly. But make the decision when you purchase real estate as an investment decision. Like analyze all the numbers, have a long-term plan of saying, hey, like even if it's stupid as what I used to do is basically I use an Excel sheet and I plan out where when I work corporately, this is my biweekly payments. I key them all into the rows and then I add in all my expenses in the middle and I say, am I going to be able to live and eat? Like, does it make sense? I would say, do an analysis before you actually jump into it.
I think that's what the most important thing. Like, don't have a FOMO and don't just emotionally commit yourself.
Because other thing about FOMO is this, and I could be wrong. Like, I think you would have FOMO if you really believe that the prices are going to go sky high. And some people may have that feeling. I just don't have that feeling that it's going to happen.
It may be not happen anytime soon either. That's the thing. It's a long term. Like before 5 years now, it's a long term.
Yeah, and you know what? The other thing also I've been telling people is that look, and I think similar for you as well is that I think in our individual respective businesses that we do pretty well in our businesses. It's pretty much obvious, but I think that we actually do better in our investment portfolios, right?
Okay.
But the thing is that we're not buying anything anymore.
Just holding it.
Do you feel comfortable buying any more real estate now?
First of all, I'm not planning on buying anything. I'm just hold on to what I have.
Yeah.
That's even then I'm rethinking again.
Yeah, exactly. So the thing is that, you know, and I mentioned this in another video, I have a client of mine that's completely pissed with me right now because they approached me at the beginning of the year and they're like, oh, we're investors. We're going to buy investment properties, send us the stuff. I sent them a bunch of stuff that just doesn't cash flow. And my honest advice is don't buy these things. It doesn't make any sense. Like, chill on the sideline. Let's see what happens. And they're super pissed with me. I've known these guys for 20 years. And I think that they're upset because I haven't sent them anything because I just don't ultimately believe in the market. That I can tell you, you should buy this thing. Dude, if you asked me 5 years ago, I would have been like, yes, you should buy. You should do this. You should do this. You should do this.
Nothing changes.
Go back and look at the videos. The proof is there. But I'm telling you right now that I'm going to stand on the side and say, I don't think that this is a great idea right now.
So let me answer this. Hussein, like everyone talking about the housing crisis in Canada.
Is there?
There's 25,000 houses sitting in the market.
We don't have a housing crisis at all. We have an affordability issue.
Yeah.
And there's, I think, one of two ways that this affordability issue is going to get fixed, okay? One way is that somehow this government is going to end up publishing their catalog and build affordable housing, which honestly is BS. But somehow we're going to get affordable housing. The other way is that the inventory is stacking up. The sales are not there. The desperate people are going to have to sell at any level.
And they have to drop the prices.
And the prices will drop. And hence creating your affordable housing.
Yeah.
I think these are the only two ways. Like, I don't understand how it's going to get any better.
Building that many houses is not going to happen.
No, because the thing is that even to move forward to build the houses, you need to have a certain amount of sell-through. Like, I am not a pre-con guy at all. And there has been hype periods of time in history where pre-con is so hyped.
Makes sense.
Yeah,
Makes sense.
it makes sense. And it's so hyped, dude, that I can't even get an allocation for myself because I'm not a pre-con guy. Because in
But
our
now
real
it's
estate
completely
sales,
opposite.
yeah, because in our real estate sales business, like either you're really a hardcore resale agent or you're
Or
a
a
hardcore
pre-con
pre-con guy. And if you're not a hardcore pre-con guy like me and you want to get into it, you will never get allocation
You don't
unless
have
you work
access
through
to it.
somebody else, a trusted source, right? But right now, I have these developers actually calling me right now. Hey, Hussein, we know you sell a lot of houses in Pickering. Can you come here? We have a special offer for you.
The builders are
The
having a
builders
tough time.
are actually reaching out and saying, we're going to offer you something different. Like, can you come here and just talk to us? Because they can't move these units. If you can't move the units, you're not getting the financing to build this project.
Correct.
So the other thing also is that if these builders don't sell at a certain value, how are they even going to be able to afford to buy, build these places? It doesn't make sense to them logically, because it's not like we're at a stable point in terms of like labor costs, material costs. We even have like a trade shortage still right now. Do you know what I mean?
And the affordability crisis is showing it because these inventories are not moving because people can't afford.
Can't afford to buy them. Like, I mean, we know that there's a ton of people out there that would buy condos in downtown, houses in Pickering, whatever, but they can't afford to buy them.
But they're worried about the payments.
Yeah, they're worried about the payments. And guess what's going to happen? When that interest rate starts to go down, I think some more of these people are going to be able to buy. But what is the level that interest rate has to come down in order for these people to be able to buy?
And also keep in mind, when the interest rate comes down, there's other part of the economy moves in a different directions
Correct.
as well, right? The job losses.
Yeah,
So when the rate comes down, that's mean the economy is not doing well.
correct.
So we have to keep in mind about the job losses and what's
Yeah.
happening overall as well.
Yeah.
It's not just about the interest rate is lower.
So you know what?
Security is important, job security.
But that's a good point, right? So the thing is that because I have my blinders on, I'm usually associating the interest rate with housing market. But you're right. The thing is that the rate's coming down because it's not looking good in the economy. So like you said, we have to have this healthy balance. But how do you balance this thing in a healthy way? Like, it just seems like the market may not be able to hold up.
That's why people are kind of reluctant to
Yeah.
make some moves. Like I know people have been unemployed for months.
Yeah. So, you know what? That's a good point too. People are reluctant to make the move. But again, I want to stress that you can't just sit there and think that it's going to be okay either. Do you know what I mean? If you're in this position, I think that you have to be able to come up with a plan. You have to be able to rip that Band-Aid. If that means that you're going to lose $20, $30, $50, $100,000, I think you have to rip that Band-Aid because it's going to get a lot worse if you don't. If you
Okay.
can't afford to float it and you're constantly running into negatives,
Then you are borrowing money and you can't even keep up to it.
yeah. So I don't know, man. Like, what would you suggest with people that have renewals coming up between now and then even in the next like 6 months? Like, what would you say would be a very smart move for these people that have the low interest rates, that have renewals coming up?
So if you have a low interest rate, that means your payments are going to go up regardless. That's inevitable. The rates are higher, payments are going to go up. Look at your cash flow. If you have to refinance, if you had to pay out some debts, make sure you talk to the professional and manage the cash flow. If more than a rate, the cash flow is important. That's my personal
Right.
opinion. If you cannot keep up the payment on the credit cards and line of credit, because I know people, they have borrowed line of credit and credit cards to keep up the payment, how are you going to keep it going?
Yeah.
So make sure it's a time to restructure things and make the right decision.
Yeah. And you know what? Just going back to that, there was a certain time where we thought, and we don't have a crystal ball, right? At a certain time, we thought, okay, how long is this really going to last? Let's take some money from our line of credits. Let's continue to service this thing. But then you come to a roadblock, right? And you're just like, okay, so I did it. I held on to it.
But what happened now?
But now maybe it doesn't seem like it's going to be worth it. We have a client, a mutual client like that. Super smart guy.
Yep.
Super smart guy. And this guy's already calling me and saying, hey, Hussein, like, I don't think this is such a great idea anymore. I did it and I don't feel comfortable anymore. So maybe what we have to do is the rental property, we got to get rid of it.
Yeah, no, I know exactly who you're talking
Yeah.
about.
And he's getting ahead of the curve and he's a smart dude.
Yeah.
But I don't think that because of our ego and where we are at in society that a lot of people are, agreed, that we're going to be willing to say that, okay, you know what, let's let this thing go. But I think you have to do it. And I'll give people an example of this. Like, I have a new construction property. My property tax still is not assessed. And I know it's going to be a high property tax. But you know what I did from the day I moved into the property? I have the roll number for the taxes. I estimated in my mind what the tax is going to be.
And you
I
start
paid
paying it?
I paid it on a monthly basis.
So you're not slammed with the big bill.
That's it. Because I think kicking the can further down the road That's dangerous.
You are
right
just
now.
piling up the problem.
Yo, man, just address it right now. Address that problem right now.
It's like a cancer. It's gross.
Exactly, dude. And I'm even saying this, okay? If your mortgage is gonna, and you tell me if it's good or bad, maybe I'm wrong, but I'm gonna throw it out there. I even have the train of thought of basically saying, if you know your mortgage is gonna come up in 3 months, 6 months, whatever, and you're gonna stay in the house and you calculate your payment, you're paying $2,400 right now, it's gonna go to $3,600, and you're planning on staying, dude, just start paying the 36.
Yeah.
Start paying the $3,600. Why not?
Prepare mentally.
I would call them. If it was me, I would be calling that bank and I'd be saying, hey, listen, just increase my payment.
And try it out.
Yo, at least try it out. And at the same time, at least you're knocking down your principal at the same time.
And
you know
also,
what I mean?
you know if you can manage this or you have a cash flow to manage this and what his lifestyle is going.
How is it going to look like, right? Like, let's get ahead of the curve. I think that people that are going to be strategic, because nobody knows where it's going to go, okay? Nobody really knows where it's going to go. But I always believe that if you're going to be ahead of it, like you're going to try to address your problems versus letting them stack up, you're going to get further ahead anyways.
Okay.
Whether you have to take one step back right now, you're going to be ahead in the future.
Especially with a principal home.
Yeah, exactly. And the thing is that at the end of the day, a lot of people that have these homes, they have families, right? They have kids, they have everything, and you don't want to let the family down.
And also, you need a place to stay.
And you know what? I know we're going on, okay? But that's another thing that I was thinking as well is that I think we let it get too far. I think the housing market thing, we let it get too far. And I'm probably one of the people that's an instigator of it, right? Because I've been saying, oh, I've been buying real estate for 20 years. It's such a great investment vehicle. And it had been. Do you know what I mean? But the thing is that I think we let it get too far. Like, who talks about blue chip stocks being such a sexy investment vehicle? Nobody. They're boring. Is it possible, Varan, that they can make it so that if you're selling, you have one house, you're selling one house and you're only buying one house, fine, you could get your mortgage with 20% down, 5% down, and you get a decent rate, whatever. But if you're an investor, maybe for the next 5 years, until we sort out what's going on over here, if you're an investor and you're buying a property, you got to put 50% down.
To cash flow.
Yeah, and to prove to the market, to the bank that you're going to be able to figure this thing out, right? You have to put 50% down or 40%. Make it so hard for you to buy the second property, because I think it's going to happen two things. One thing, you're going to have less people speculating on the market, which is going to help you control your price.
It's going to push investors up.
Right. The other thing also what's going to happen is going to hopefully drop your inventory position, because right now I might be more inclined to sell the property right now, the one that's not doing so well.
With your bias.
Yeah, and then I'll buy it back again later. Do you know what I mean? When I feel like it's right, if I feel that it's right. Because I'll be like, whatever, I put 20 points down and I can re-get it. I will think differently, dude. If I'm like, it's a $900,000 property, I'm going to put $450,000 down to replace this property? Doesn't make sense to me. So I think that maybe we have to think it out in a different way about how this is going to move forward. How are we going to control the housing market?
But regardless, even if you put, like as an investor, even if you put $450,000 down, do you get the return for the $450,000?
But I wouldn't do it. Would you do it?
Absolutely
the whole
not.
idea is to make
appreciation.
Yeah, but the whole idea, I think, to make it so less appealing, and to make people stop looking at it even for a little while, a few years, about being a very profitable investment vehicle. I think that's what we need to stop, because this is how we got carried away. Like Canada has almost, to me, seems like it's been built on the housing market growing, and we have nothing underneath that. So once a housing market comes down, that's going to be a really hard thing. And we've experienced it, and we're going through those emotions right now. As the housing market cools down, like we're all kind of running into a little bit of a circle here about what's going to happen next, right? All right. So I guess we're on the same page about all this, which is basically, if you guys have mortgages that are coming up, think about it in advance. Don't wait until the last minute and hope that things are going to get better, because if I was going to bet, they're not going to get better.
Start talking to the professional 6 months in advance.
Yeah, start talking to people in advance. And if you're already experiencing issues with your investment properties, talk to somebody about it. I'm not saying that it's always a solution to sell the property, but it might seem in this environment, it might just be the best option, right? And move your money somewhere else. Maybe you even want to put it into your principal residence where you can lower your actual cost, and maybe take a vacation after you do something like that, right?
Enjoy your life.
Get back on track. Yeah, like what else are we going to do? Make sense?
Perfect.
Anything else, sir?
You got it all.
Awesome. So guys, obviously Vern's been on my podcast, my show for a long time. I thoroughly trust this guy. Even if you're working with another mortgage professional, because I don't want to step on anyone's toes. I don't want to step on realtors' toes. I don't want to step on anyone's toes. I respect everybody for what they do. But if you feel like maybe you're not getting the right advice. Maybe if you feel like just saying like, hey, let me get someone else's opinion on it, I would highly recommend you guys contact Varan just to get another opinion. And I tell this to people all the time. I just tell them like, hey, you probably have someone that's taking really good care of you, but it's not going to cost you anything to call this guy and just get a high level view. You probably hate this, but I even say, don't even send him your documents. Just tell him at a high level, this is my scenario of what's happening, right? This is where my income is at, this is where my debt's at, this is where my credit's at. What do you think? Because this is the solution I'm being offered.
Yep.
And I think this guy's a pro enough to look at that information and tell you that, hey, are you doing okay? And if you are doing okay, I guarantee this guy's going to tell you to go with that. He's not going to try to take your business. So
there's so many people I put back the same broker.
100%.
Actually, I had a client, we haven't heard back, the realtor pushed the mortgage broker. And I followed up and they're like, oh, we already got approval. I'm like, you know what, that's great. What's the rate you got?
Yeah.
5.29. I'm like, you know what, I can get your 4.99 with the same lender you went to. You don't need to move with me.
Yeah.
You're closing in 2 weeks. Just call your mortgage professional you're dealing with and tell them, can you get match 4.99? And they call me the next day and say, thank you so much. Like I didn't even tell them to move through me because they're first-time home buyers. They want to deal with me, but the realtor had the relationship with the mortgage professional. They went and did the deal. But I actually helped them to get the lower rate.
That's awesome,
They're
man.
so happy. They almost got like a 40 basis point less than what they've been quoted.
I was going to wrap this up, but there's so many situations that we've talked to people out of this thing. And one was even from last year, remember, where there was a guy that was getting foreclosed on and he delayed.
Yeah,
Took the rent money that he was getting, serviced his own lifestyle with that money, and he was getting notices from RBC, like stacks. When I went to the house, stacks of mail, like threatening letters from lawyers, the bank, everything. And he's like, Hussein, I didn't open any of this. I was like,
scared.
oh my goodness, bro, it's not going to change if you open this thing. You're screwed either which way. And then he's like, I have to keep this property. I have to keep this property. You told him what it was. You could do it, but you also told him that in 3 or 6 months, you're done.
I think I remember the conversation. I asked him, you cannot keep up the 2.99. How are you going to pay 10.99?
Yeah, it just doesn't.
And for how
make
long?
sense.
And
Yeah.
what's going to happen to the fees?
Yeah. So I guess like as I was going back to wrapping it up is that like, look, I think that we both operate from a genuine perspective and we don't want to see anyone get stuck either. So if you guys need a second opinion on your mortgages or what you guys are dealing with, or if your renewals coming up, I encourage you guys to contact Varan. And if you guys have things that are going on with your house itself, the real estate market, and you guys are wondering what should you do with your investment property, your current property, if you guys think that you're going to be running into problems, give us a shout. Even if you don't want to, my Calendly link is going to be below on this link over here. So just click on it. I'm not going to be one of those guys that hounds you, follows up with you every week and just trying to gain business from you. I genuinely want to see people not get into trouble. So if we can spend like 15 or 20 minutes on a phone call, I can understand your situation and I can give you my perspective and then you can do whatever you want to do with it. I think we could try to lead you the right way, but that's going to be up to you. The call's free and I'm not going to follow up with you again. So click on the link. Let's book a call. Let's have a chat to talk about your market. And even then, if you're not in trouble, I think Vern's tired of my phone calls. Chris is tired of my phone calls. No one really wants to talk to me about the market anymore. So I need new people to talk to about the market. So I love to talk to you. Even if you don't want to do anything, just book an appointment. Let's talk about the market. Okay, guys? I hope you guys enjoyed this video. Hit a little like, share it with your friends and family. I know it's going to go a long way. And I really think I have the best content, better than Vern's, believe it or not. So I encourage you guys to subscribe. Until next time, guys, remember one thing, that Varan knows mortgages, and get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.